You guys, big changes are coming for condos and the financing. So what do buyers need to know? You guys, you might have found the perfect condo. Finishes are great, the location's ideal, and the price surprisingly reasonable. For the past few years, buying condos has been a bit easier because there's just been more for sale and there's less demand. But wait, can you actually get financing for the condo? That is the million-dollar question. And thanks to Fannie Mae and Freddie Mac, the answer for financing might be not anymore. So what happens if the condo that you want to buy isn't eligible for financing? And what do you need to know before you get your heart set on a new home? All right, I am Melissa Terzis, DC Real Estate Mama, and I have been in the DC real estate market here since 2001. So I help people like you buy and sell homes throughout DC, Maryland, and Northern Virginia. So shoot me a message if you want to chat. We'll put my info here. All right, so everybody remembers Surfside, right? After the Surfside collapse, Fannie Mae and Freddie Mac started reviewing guidelines for how they assess the risk of a condo building or community. These guidelines are constantly being reviewed to ensure lending in the condo buildings and these different communities is as secure an investment as possible. I mean, if you think about it, it makes sense, right? If the building collapses, the master insurance policy is what determines sort of the whole rebuilding and governs all of that process. Now, right now, things are getting stricter, particularly with respect to insurance and insurance requirements. These are also not minor tweaks, you guys, that are being instituted. These are like sweeping changes to underwriting guidelines. Some experts are actually saying that they think 30 to 40% of condo buildings might not qualify under the new rules. And the timing for this, it's impeccable, isn't it? As always, between rising insurance costs and lingering post-pandemic repair delays, plus the demand that finally started to get a little bit better for condos, now this is hitting the condo communities and hard. Just when we were recovering in some areas too. So locally in the DC area, condos have had this like burst of traffic the past few months, like late spring into summer. So what are the Fannie Mae and Freddie Mac changes for underwriting condos? Let's get into that next. Number one is replacement cost requirements. So insurance policies now, the master policy I'm talking about for condos, must cover 100% of the cost to rebuild, not just the depreciated value. So insurance companies used to be able to say that 20-year-old roof, yeah, it's worth about $50. That's done. They can't do that anymore. Full replacement value or bust. The lender has to provide documentation as well on how the replacement value was calculated. Number two, the required perils are now standardized. Think fire, smoke, wind, water damage, those kinds of things. And no, buyers can't just tack on a separate policy anymore. These risks must be included in the master policy insurance regardless of location. So I know you might be thinking Florida, well, whatever. Last year, I bought a condo in Florida, and for some reason, there was no wind insurance included in the master policy. It had something to do with the age of the roof. Anyway, Florida's a whole other animal, but my mortgage company came back and said, you need wind coverage. And so do you know what insurance companies in Florida don't really want to cover? Wind. So the mortgage company decided to just find me a policy and assign it to me and send me the bill. Thanks. Number three, deductibles must be reasonable. Policies with more than a 5% deductible of replacement value cost will raise an automatic red flag. Number four, inflation guard clause insurance policies must include inflation protection on reconstruction costs. Because lumber prices don't exactly stay the same year to year, this is why, right? So my DC Condo Association recently learned that the master insurance policy value had not been updated since the building was built in 1981. So had something happened to the building, the policy would have covered for it getting rebuilt. But what they were all saying was that it was going to just end up going back to what it originally was when they wrote the policy. Everybody would have gotten carpeted floors, shag rugs. I have no idea what was going on in 1981. Low-grade cabinets, because the policy did not account for upgrades or inflation. Number five, waiver of subrogation. In plain English, if the roof leaks and damages a unit, the insurance company can't turn around and sue the owner for coverage that they had to cover. The master policy actually has to waive that right. So that is a lot of the legal sort of mumbo jumbo, but how is this affecting condos and what's happening with them now? So one of my go-to lenders is Carrie Sansom at Atlantic Union Bank, and she shared what she's seeing locally in the DC area. She's awesome, so I'm actually going to put her contact info right here, because if you come to me and I send you lenders, Carrie's one of the 3 of my go-to that I always refer people to. She's fantastic. So many condo buildings are underinsured. That's the one thing that they're seeing for sure. Their current policies are only paying out depreciated values because, hey, cheaper premiums, as Carrie said. But that's not going to cut it anymore. And most condo boards actually don't even know that this is an issue. As they're learning of these changes, premiums are going to increase so that insurance can cover what is needed. The next problem that they are seeing locally here is deferred maintenance. So new inspection requirements mean more eyes are going to be on the building, and those eyes are always going to find something. If it's structural or a safety concern, forget financing until it is fixed. Litigation. If a building is in the middle of a lawsuit, another strike. Other common disqualifiers are going to be a building that has too much commercial space, one owner that maybe holds too many units, a high condo fee, delinquency rate. These are all reasons that a lender might say, hard pass, we're not financing in the building. Now, if a condominium isn't eligible for Fannie Mae or Freddie Mac financing, then the buyer would need to pursue like a change to insurance with the condo board and the management. That's not always possible because that might be difficult. You don't even own in the building and you're asking them to make changes to something that they don't see is even a problem. So if not, there's alternate financing paths available. There's FHA or VA, and then there's also like non-qualified lenders that have options. They usually call this like a non-warrantable condo. But the mortgage rates on these puppies are usually 1% to 2% higher. And don't forget that condo mortgage rates are already like 1% higher than a single family home because there is added risk. So FHA and VA, they are going to be more restrictive than conventional financing. So what does this mean for you? Well, if you're a buyer, understand this. It's actually not about you. So this is more about whether the building qualifies. And that's frustrating, especially if you are pre-approved and ready to go. But this is a building level issue. Previous sales are not really an indication on whether a property is eligible for financing. And if you think about it, it's because every time it hits a different underwriter and you just don't know like what's going to get flagged and what's going to happen. So this is where having a local lender is going to be a huge, huge asset. Please do not roll into town with your mom's credit union contact in Colorado because they're not going to be as well versed as what's happening with what's happening here. If you are a seller, know that your buyer pool actually might shrink to cash buyers only, and that's if the condo is not keeping everything the way that it needs to be for these new guidelines. That's going to affect pricing and marketability. And if you are a condo owner and maybe you have already bought and you're not thinking of selling, you need to get on the board. I always tell people this, or at least get involved and attend meetings. I say this all the time, but it is critical. You need to know what coverage your building has. You need to push for changes if necessary. Your ability to sell or refinance actually might depend on it. Now, these aren't necessarily bad changes. Like, I don't want you guys to think like this is terrible, what's happening? I'm a first-time buyer and a condo is really what I was gonna buy. These are changes that really should have happened probably a long time ago. You want your condo building to be structurally sound, financially solvent, and adequately protected. So get informed, ask questions, work with the right realtor, make sure that the lender that you have is local, and make sure that they are asking questions for you before you get your heart set on something that might fall apart. So I am Melissa Terzis. If you have any questions about any of that, my contact info is coming next.